The stock market is crazy. Bond funds are shutting down, and there are tremors of concern about the real estate market. So how would you like a way to make a safe, reliable 12% on your money? I'm Bryan Ellis. I'll tell you how right now in episode 169.
You're listening to Self-Directed Investor Radio, America's only podcast exclusively for affluent, self-directed investors, where each day of the week you receive innovative investment strategy and deadly accurate market analysis that's untainted by Wall Street and unblemished by government propaganda, all in 7 minutes or less. Coming to you now from iTunes, Stitcher, and SDIRadio.com, here's your host, Bryan Ellis.
Hello, SDI Nation. Welcome to the podcast of record for savvy, self-directed investors like you. Those of you who are longtime listeners to this show know that I believe in one standard for investment evaluation for self-directed investors. It's called the S3 standard, and the three S's stand for simple, safe, and strong. Today, I'd like to share with you a strategy that absolutely fits that mold. It's called quick flip lending, and it's incredibly simple and very profitable. Here's how it works. There are people out there, lots of them, who buy real estate with the specific purpose of renovating it and reselling it as quickly as possible. They're called flippers or quick flippers, and there are a lot of people doing this. In fact, according to RealtyTrack, over 43,000 flips were completed in just the third quarter of this year. And the average gross margin on those deals was over 33%, so huge margins indeed. So there are a lot of people actively involved in flipping real estate, and all of them are common in one way. They need money, a lot of it. That's where your huge opportunity is for a simple, safe, strong profit. Imagine this. I'm a property flipper, and I come to you and say, Mr. or Ms. Investor, there's a property in a very hot market that I can buy for $76,000. It only needs $10,000 of renovations, and the thing is, it's worth $125,000. So if I pay you interest at 12%, would you lend the money to me to do this project for the next 12 months? Well, you, being an astute investor, know that 12% is a really solid return, so you do a little snooping around. And sure enough, you find out that everything the flipper told you was true. You find out the property is in a strong market. It is worth $125,000, and it really does only need $10,000 of renovation work. So what do? That flipper wants to borrow $86,000 to cover both the purchase price and the renovation. Should you do that? Well, folks, essentially we've already established that this approach is consistent with the simple tenet of the S3 criteria. It's just a loan. You can't get simpler than that. And you know it's strong too. 12% is a strong return. Seriously, I don't know a lot of people who wouldn't be happy to get a consistent long-term 12% return on their capital. So we've got simple, we've got strong, but is it safe? Answer, it can be very safe, or it can be a bit foolish. The safety will depend on a couple of fundamental issues: how much money you actually choose to lend and how your money is secured. So here's what I suggest for each of those issues in order to make this deal safe for you. How much should you lend? Most professional lenders agree that the maximum that should be lent against a property in order for your capital to be really safe is 65% of the property value, which in this case is a bit over $81,000. Now, to make it simple, you might choose to lend only the purchase price of the property. Again, that's $76,000, and require the flipper to fund the renovation out of his own pocket. Because let's be clear, my friends, it makes a lot of sense to demand that the borrower have some skin in the game of his own. In fact, that's very wise. As someone who has done this kind of lending, I like the model in which the borrower is required to fund the renovations out of his own pocket. So the question of how much to lend is answered. You're going to lend $76,000. But how will that money actually be kept safe? That too is rather simple. You get a first lien against the property for the amount of your loan. So you get a $76,000 mortgage against a property that's worth a whole lot more than that. So bottom line, even if the borrower totally flakes out, you can quite easily sell that house and get all of your money, interest, and fees back because there is a huge equity spread that protects you. So with a well-secured, well-considered quick flip loan, it's hard for the lender to lose money. Not impossible, nothing is a guarantee, but with a modicum of rationality, these deals really make a lot of sense. They're absolutely simple, safe, and strong. It's just a loan, remember, well secured, for which you collect 12%. And you know what else? These loans tend to be short, almost always under 12 months and usually under 6 months. So you get your capital back quickly and you can do it again. I happen to know that there's some really attractive deals like this available right now. In fact, The example I just gave you, that's a real deal. Now, most of these deals require somewhere in the $100,000 to $200,000 range, but the ratios are all the same. You still never lend more than 65% of the real property value. You still require the borrower to have a lot of skin in the game. It's still simple. It's still safe. It's still strong. So if you'd like a referral to some of those opportunities, just go over to sdiradio.com/lending for that info. Again, that's sdiradio.com/lending. Folks, you know I love real estate as an investment. I think it's the best wealth opportunity ever, but being a lender against real estate, using smart, safe terms, frankly, that may well be the best of all worlds. I really do think that's an extraordinarily strong way to go for most people, and for far more people than are currently involved in doing it. If you've never done any of this type of lending, I respectfully recommend you consider doing so. It's hard to argue with the wisdom of it. And my friend, wouldn't it be nice to be able to say that your investing is fundamentally wise? So check out sdiradio.com/lending for more information. In tomorrow's episode, I'm going to share with you an extraordinary way to get a huge tax break for those of you who need some tax relief. But to get a tax break for this year, you've got to use this strategy by December 31st, so be sure to tune in to tomorrow's episode. In the meantime, invest wisely today and live well forever.
Thank you for listening to Self-Directed Investor Radio with Bryan Ellis. Don't miss a single episode. Be sure to subscribe to Self-Directed Investor Radio right now on iTunes, on Stitcher, and at SDIRadio.com. Your feedback is always welcomed via email at feedback@SDIRadio.com. This show is for entertainment purposes only and is not intended as legal or professional advice for your situation. Content is the property of the Self-Directed Investor Society.